So excited to have my two old friends, Lisa and Itxaso, here. Itxaso I've known from the London VC scene probably for 15 years or so. Watched her grow, become a general partner in Notion Capital, one of the top, we used to say enterprise SaaS funds, but I'll let you explain what that is now. And also recently joined the leadership team at the Kaufman Fellows, right?
Correct. I'm on the board.
On the board. So the Kaufman Fellows, for those who don't know, is like the Harvard Business School equivalent for VCs. They want to become venture capitalists or further develop their training. And we have Lisa Edgar, who is also working with me on a regular basis. Lisa is an independent venture capital advisor. She's the founder, co-founder and former managing director of Top Tier Capital, which is probably one of the top 3 fund of funds investing in venture capital firms in the Valley and more recently also in Europe. So my name is Dorffer. I'm a former entrepreneur turned VC. I run a fund called Floreat Venture Partners, which I've co-founded together with Lars Rasmussen, the founder of Panathēnea, and a couple of other amazing people. And we thought we would share some of our perspectives on how the VC industry is changing. Because today, capital is abundant, and everything is getting built, so the role of a VC is changing a little bit. And also, I saw a stat the other day that I think 80% of all the venture capital money is going to AI companies. So, but a lot of VCs are not necessarily educated in AI. They came from a generalist background. So let's kick off this maybe with the VC side, and then we can cover the LP side afterwards. So what makes a great VC today when it's not about the check so much anymore?
So hello, everyone. It's great to be here. It's my first time at the conference, and I'm amazed with the speakers, with the people, so many founders too, so it is really great to be here. So I'm an investor at Notion Capital. I'm a general partner. I've been investing for around 13 years. I was a founder before, and I moved to I would say, the easier side of the table, even though we also need to raise money, and Lisa would talk about that, and it has become less glamorous than we thought it was. But I do think that, I don't know for everyone, but I do think founders today definitely are looking for much more than capital. If we think about it, the number of funding rounds have shrinked, so the capital is being concentrated in fewer companies, which means that those founders that are getting the money, they are definitely being more diligent on choosing the investors that they want, and they are very specific of what they want from those investors. So that being said, from the investor perspective, we also need to think about what is the best way to support our founders. I do believe, and I sit on many boards of companies, and I do believe that our position should be on advising rather than telling, because I don't know if you've been on many boards where it looks like the investors, we know it all, where it's not the case. So I do think that to start, we should have a position on advising rather than telling. What we know at the moment, I'm on over 10 boards. So as you can imagine, all of them are B2B software. As you can imagine, I can see patterns on those companies, and they've gone through different cycles too, because we went through the COVID cycle and 2021 cycle, and we are going now through a much more of an AI cycle later. So we go through cycles, and I do think areas where we can help is really helping founders understand when to accelerate, put more money into go-to-market, where to invest in terms of leadership, because I do think that particularly when founders are starting first or second business, they probably are not thinking as high as they should on recruitment, and honestly, the sky is the limit, is who do you need, and let's just try to reach out to these people and convince them to join and just believe that they can join your business. So in the recruitment side, and overall strategic decisions that the founders might have questions on, and we might be able to advise. We don't know it, they don't know it, we don't know it. If we will know it, probably we wouldn't be here right now. We had already built it, right? But at least advising them on what we think strategically makes sense with the capital they have, because we do see that those capital cycles over and over again.
VC as an asset class is also evolving in Europe, and LPs, the limited partners that invested venture funds, are looking at it compared to other asset classes, right? And we are no longer, some may say in Europe we're still, decades behind Silicon Valley, but we're very much catching up. Someone told me the other day that there's 3,000 seed funds in Europe, which is wild, right? But as founders are getting more selective with VCs, so are the LPs, because if they're going to put money into this super high-risk asset class, they also expect a much higher return. So how has that changed recently?
It's changed a lot. Hello, everyone. I'm Lisa, and this is such an amazing place to be here in Athens for this conference. So kudos to everyone here and for the organizers. Boy, have things changed. And I feel that we're really in a moment of time where a lot of people, a lot of investors, LPs, limited partners in these funds, don't really know where to put their money. Now, of course, some of those institutional investors, like I was at a venture capital fund of funds. We were in business, 25 years, and we knew what our job was. We were to invest in venture. But as Christian just said, there are a lot of investors, institutional investors, that have lots of choice on where to put their money. So why put it in venture? And if you're going to put it in venture, where? Naturally, they're re-upping on the VCs that have made them a lot of money in the past. So this concentration of capital is absolutely happening. A lot of them are the bigger funds or the name brand funds. With the newer, smaller emerging managers that are really investing behind the current trend, which is AI, but AI broadly speaking, as it changes everything in the physical side, in the more software side. I think a lot of institutional investors are confused on where to put money. And putting capital with VCs that have made you money before is easy because they're generally the ones that actually follow the trends. They can attract the best entrepreneurs. So therefore, that's why they can have a consistency of returns. But in this newer area, it's a little bit harder. And things have gone more physical, too. So I can't do enterprise software anymore, so I'm going to robotics, automation, space tech, defense tech, just something that's a little bit deeper technology, and often has a much larger hardware component.
It's also interesting, there are websites where you can track how websites have changed over time. And it's kind of funny to go and look at the VC website, a big name, and you look at what's on their website and what's on the partner's profile. And some partners, they're generalists. They go from being experts in climate, and now all of a sudden they're experts in deep tech, right? But as a founder, and a lot of founders are now much younger, they're using Claude code. They don't actually need to raise money for a while. As they come out and go back into the market, when they meet a lot of them, they want to choose someone who's very technical rather than a generalist. So there's this whole catch-up in the VC industry where founders or VCs basically need to study hard and be quite quick and replenish their team with technical staff so they can win the deals. And historically, I think VC in many founder communities also have a bit of a bad name, especially as it started in Europe with the VCs wanting to be on the board. They wanted to have veto rights and everything. Essentially, they wanted to run the company, right? And I think what we're seeing now is the trend is that like the best founders are very picky with who they choose, and the VCs need to kind of figure out when to get out of the way and when to be helpful. How are you at Notion thinking about this?
Yeah, it's an interesting conflict here because, as you just said, Christian, founders can go online and search and answer many questions that before they were come to us. Tell me things like, what should be the profile of the head of sales? How do I define who are the 5 head of sales of the fastest growing businesses in Europe right now? And they give you the names, and you look at their profiles. Why are those the best ones? Why? And you can ask all these questions. Before they were coming to us because we had a portfolio. Now they don't, right? Which is good. Because of that, I think there is something that has become very unique, and that's the network. The access to people who can help in different areas that are much more specific and that are good to hire. They know their network. I give you an example. In our case, for example, most of our companies, we are a European investor. We only invest in Europe, but all our companies, as soon as we invest, they go to the US to build sales and go to market. They don't go to the US usually to hire technical people, but they go there because the market is very big and they want to capture that market too. So if we build a network and very good relationships with some of the best go-to-market people, then we can connect our founders to them, either to hire them or to work as advisors. They are people who are at the CRO at this company and that company, but they can work with the founders. They have a point or two of contact when they go to the US. They know who to hire, they have their network there, they know who wants to move to another role. And so I do think the network and people access to physical, in fact, people is what is making a huge difference today.
It's also, it has in a way got much harder being a VC because, as I said before, everything is getting built, right? So it's really difficult. But one thing that the top VCs, and Lisa can talk about that, do is they focus on things that can really change the way things operate in the world. I used to send some of my deals to Sequoia and say, what do you think? I'm excited. I think this could become a unicorn. And they would say, yeah, that's kind of interesting, but it's not really big enough for us. And I was like, unicorn's not big enough for you? And Sequoia is not the world's best performing fund because it's better at picking the right people, but it's picking the right people that produce decacorns, not unicorns, right? So as VCs, we're looking in this myriad of AI right now and saying, okay, what are the actual companies that have a chance of succeeding? So there are a lot of founders in this room. So I think it's really important to do your research to figure out how competitive the space is that you're in. And going back to the previous talk with Sat, there's a big risk that the next version of GPT will basically wipe out the raison d'être for your company, right? So how are you going to survive in a super intelligence world? And as VCs, we need to have answers for this because we're underwriting, we're investing in these companies. We need to have the confidence. How do you build this confidence at Notion?
So definitely we think a lot about defensibility, and I was at another panel at another conference, and somebody told me outside, I hope you guys don't talk about moat and defensibility because that is everything that is being talked about. But the reality is that that is what we need to be talking about, and as founders, you mentally need to be really drilling yourself to think, how do you compete in the future? And I think there are probably 4 things that I would look into as a founder that gives you defensibility in the long run. The first one is data. Are you able to, while you are starting with off-the-shelf LLMs, building much more specific, personalized, your own LLMs using that data? Are you using the data to retain your, to improve the quality of your outcomes? So data is the first one. The second one is distribution. Having a very unique distribution channel and understanding very well how can you go to the market, this partnership is embedded, it has become even more important than in the past. The third one, I would say trust. And trust comes with a brand. So building a brand, if we think about it, Lovable has built incredible trust and a brand. It's not rocket science to build that product. Today, obviously, they are using the data to improve their algorithms, and that basically gives them that trust there, right? And ultimately, the last one I would say, embedded and workflow. Thinking about workflows, don't think about unique features almost, an independent product, but rather be embedded on the workflow and almost think of end-to-end jobs to be done for either an individual or for a vertical or whatever it is, but it needs to be embedded within the current solutions of the user. So I think these 4 things, if you start from that, they will take you pretty far in terms of building the defensibility of the business.
Venture capital is also, as a founder, you don't really think about it. You think you're great and the VC should invest in you. But one of the key things that VCs have to do is that they have partners like Lisa, and they commit to returning the capital with interest after 10 years. But in a market where there are fewer IPOs, it's harder to get an exit, and a business that might be worth 2 or 3 billion today, because of competition, might be worth $1 billion tomorrow. All of a sudden, the role of a VC or the part that the VC can do is to help get through exits, be creative in finding ways of actually getting out of their positions to return capital. What is your perspective on how the role of VCs change in getting to exits?
Yeah. Liquidity is everything to investors. It really is. So this notion of, I don't know how much you know all the lingo, but TVPI, so that's unrealized what it's worth marked on your books, versus DPI, which is distributed capital. The latter is what all limited partners and most investors are talking about today. So it matters. And in a world, like you said, where a natural exit, an IPO, an M&A deal, they just are not happening with the level and the velocity that they need to in order for the flow of commitments to distributions for an investor to really work. Then comes the secondary market. And I have had decades of experience in the secondary market. There is now a retail secondary market. We always encourage the VCs to think about liquidity, get liquidity on those that aren't going to be the fund drivers, and maybe even for the ones that are going to be the fund drivers, to take some early liquidity through secondaries. Because venture is a power law of business. I'm sure everybody in this room has heard that before, but it truly is. It used to be an 80-20 rule. 80% of your returns come from 20% of your companies. It's like 97% or something like that today of your returns come from 1 or 2 companies. So those are the ones you need to be focused on. You might need to get some early liquidity. If a big investor comes in, doesn't mean you have to sell it all. People are selling strips of LP positions, companies. They're doing all kinds of more derivative transactions to do this. This is important, and it's something you really need to be aware of and learn and understand, because that's what investors are going to look for. Mm-hmm.
So are you seeing more kind of investment bankers joining VC to make sure?
No. That would be bad. It's it's founders and operators turned angels, turned investors, turned their own fund. Like Sato was just sitting here, right? I mean, this is like you were a founder, now you're a VC. You were like, that's really the best. You do want people to have experience managing other people's money. That's one of the things investors look for.
So does the Kaufman Fellows Program teach VCs how to get to exits?
Well, I was going to say that this is definitely a reality. I mean, investors, ourselves, we are being pressured by our LPs, our limited partners, what Lisa has been working on in her whole career to return capital. And the reality is that we always thought about venture being a long-term, it's a long-term game. but at the same time, we need to give return. So yes, at Kaufman, we talk a lot about this, and we talk a lot about the way we communicate to the founders that this is going to start happening. Because I do think there are some founders also that get a little bit, no, you cannot sell. Obviously, we need to be conscious when are we selling. Always needs to be in line with funding rounds, because we can't be bothering the founder to be pitching to some investors, other investors, just to sell my shares, and money is not going into the company. So it needs to be aligned with those funding rounds. But there is a lot to be taught to the investors and also educated to the founders on how to work together to get on that. Because I do believe that follow-on investors are not going to see secondaries as a very bad thing these days, because all the investors are experiencing the same issue. And so they see it as, okay, yeah, they need liquidity, but it is something that I think the market, both from the investor side on the communication and the founder side on the understanding, needs to be very, very important.
Yeah. I think it's interesting. Someone last night told me there are 50 VC funds in Greece, and a lot was asking me which ones should I choose. And for me, that's almost the wrong question, because VC is not constrained geographically anymore. And you could choose to have a fund from London, from Germany, from anywhere. And the VCs are, I mean, you're focused on Europe, I think, right?
Yeah.
We're focused on a big part of Europe. So I think you need to...
we have 2 companies in Greece.
There you go. We have one Greek co-founder in one of our companies in London. So there you go. But in your mind, what would you say, what VCs will be the preferred, what's the DNA, what's the fund size, et cetera, of the top founders? What types of funds are they going to choose? And what type of funds are the LPs going to choose going forward in this world?
Yeah. So it's pretty simple, although it's hard to execute, right? So it's a person, a solo GP, or a group of VCs that have formed a fund that can raise the capital, which is not easy. It's not easy today, even though there is some abundance of capital. It's not easy to raise a fund, I know that. But an LP wants to make sure that they can raise a fund, they have the network and the reputation to source the best deals. They know how to manage a fund, right? And this is some of this, okay, I'm going to take some liquidity here. I'm not going to do this round. I'm going to focus on these companies because they're the ones that are breaking out. So really, you have to be a fund manager. But you also have to build your firm. And that's about the people, right? So you have to be able to attract investors, other colleagues to your platform, because if you want to be a long-term player, you're going to have multiple generations if you're actually building a venture platform versus just having a fund. All of those things that were important day one of this industry are still important today.
And
I could just say one thing.
Yeah.
In fact, I know we are tight on time. The connection and the feeling and the understanding that you have with the partner who is going to be on your board is the most important part. Regardless of the size of the fund, on where they invest, if they are aligned on your vision, on what you need next, and they are willing to help you on that, you are covered. Regardless of the rest, they will make it work. So I do think that thing is definitely good.
And my final comment is that I think a lot of young founders are much smarter today. They have all information available. I think there's a challenge to establish brands because all of a sudden founders can actually research what is the background of this guy actually. Oh, he invested in those companies. What do those founders actually think of him, right? So as founders, it's really important to choose the right VC, but you have access to all the information to do your homework to make sure you make the right choice. I think we're out of time. This was fun. Thank you.
Nice.
Thank you. Nice to see you.
Thank you.